Hello, I'm James Yardley. I'm the Senior Research Analyst at FundCalibre. I'm joined today by James Mahon, the Elite Rated Manager for the Tenax Absolute Return Strategies Fund. Thank you for joining us, James. We had quite a severe sell-off in the fourth quarter of last year in markets. How did the fund hold up then?
Well, I'm pleased to say it wasn't well. The fund held up well. It wasn't actually just stock markets. It was almost all risk assets had an unfortunate wobble. The fund was pretty static throughout that period. We have a reputation to maintain here. It was a period when it was necessary to batten down the hatches, I have to say. We went into it with a cautious stance, and we didn't really move much away from that until November, when markets really started to plumb, and then December. And during that latter period we did begin to pick up risk assets. There were some interesting opportunities then, but the fund held well.
Yes, of course. I think your fund is one of the few which is an absolute return fund which has a track record going back through the great financial crisis, of course, isn't it?
Yes, we launched just in time in November 2007 for the crash, but on the other hand it did give us a chance to test the fund. But so far we've managed to achieve only 15% of the downside in risk assets, equities, and 30% of the upside. So we're keen to maintain that as far as we can.
I see you've increased the amount of money going into convertible bonds in the fund. Can you explain what those are for our viewers and why they're potentially interesting?
Yes, that's right. We would like to increase it further still. A convertible bond is an interest rate, like a fixed interest security, but there is the option to convert from the fixed interest security into the underlying equity of the company that has issued the bond. So a company will borrow money and will get better terms to borrow that money by adding this option to convert into the underlying shares. From our point of view, it's very interesting, providing one can buy the bond at a respectable price. So we would treat the bond as any other fixed interest security. We would look at the credit of the issuer. Were they respectable? Were they likely to maintain their payments? In other words, and if that is acceptable, then we will consider whether or not the equity option on top is useful. And that risk profile is very interesting to the fund because the bond is low risk, but the equity option provides upside if the underlying equity rallies, but not the downside if the opposite happens. So very interesting, and certainly interesting to the fund. It's a market that has been rather limited in recent years because companies didn't need to issue convertible bonds because conventional bonds were so cheap to issue, and companies have been able to borrow very cheaply. I suspect that window is closing, and we've all seen that the volume of slightly lower grade fixed interest securities has gone rather too far. So I think that window of opportunity is closing for companies, so hopefully we will now see more convertibles, which we would welcome.
Great. And last time we met, I think you had quite a lot in floating rate notes. Is that still the case? And I think interest rates have now started to go up a bit in the US particularly. How has that impacted the fund?
Yes, we do still have a large proportion in floating rate notes, and they benefit from rising rates because, as the name suggests, the rates float up with the increase in the rate that they're linked to, principally LIBOR, but this is now changing, and increasingly they're now linked to SONIA, which is likely to replace LIBOR in due course. But the increase in short rates is certainly helpful to the fund. If you go back 18 months or 2 years when rates were absolutely on the floor, it was very hard to achieve anything decent on cash. But now, high quality floating rate notes, we are getting 1.3, 1.4%. So this is a significant improvement.
Great. Well, thank you very much for joining us.
Thank you.
And for further information, please see FundCalibre.com.